Hello, and welcome back to Money Mastermind. Today, we are exploring the pros and cons of swing trading versus day trading. Now, let's get started. But first, if you enjoy this content or anything related to investing, be sure to like and subscribe for more videos like this. Now, let's get straight into it. Swing trading and day trading represent two different approaches to navigating the financial market. Swing trading involves holding positions for a few days to weeks, aiming to profit from short to medium-term price movements. On the other hand, day trading involves buying and selling securities within the same trading day, capitalizing on same-day price changes. Each method has its unique characteristics, advantages, and challenges, making it essential for you to understand the differences between them. The importance of choosing the right trading strategy for wealth building cannot be overemphasized. The chosen strategy should align with your financial goals, risk tolerance, time commitment, and market knowledge. Selecting the wrong approach can lead to unnecessary losses, missed opportunities, and frustration. Therefore, a thorough understanding of swing trading and day trading is crucial for investors seeking to build wealth through trading in the financial markets. This video provides an in-depth exploration of swing trading and day trading, comparing and contrasting their key aspects. It examines the strategies, techniques, risks, and potential rewards associated with each approach. This video offers insights into factors to consider when choosing between swing trading and day trading, such as personal preferences, lifestyle, and market conditions. By the end of this video, you will gain a comprehensive understanding of swing trading and day trading, allowing you to make informed decisions about which strategy best suits your wealth building objectives. Swing trading is a trading strategy that aims to capture short to medium-term price movements within a broader trend. Unlike day trading, which involves buying and selling securities within a single trading day, swing traders hold their positions for several days to weeks, taking advantage of market changes. This approach allows swing traders to capitalize on momentum shifts and trend reversals, seeking to profit from both upward and downward price movements. The time horizon and holding period in swing trading typically range from a few days to several weeks. Swing traders aim to enter positions at strategic points within the current market trend and exit once the anticipated price movement has occurred. By holding positions for longer periods compared to day traders, swing traders seek to capture larger price movements and potentially higher profit. Key principles and strategies used in swing trading revolve around identifying and capitalizing on price patterns, trends, and momentum. Technical analysis plays a significant role in swing trading, with traders utilizing various indicators, chart patterns, and trend analysis techniques to identify potential entry and exit points. Common strategies include trend following, breakout trading, and mean reversion trading. Risk management is also key in swing trading, with traders implementing stop-loss orders and position sizing techniques to protect capital and manage risk effectively. In summary, swing trading is a trading strategy characterized by holding positions for several days to weeks to capitalize on short to medium-term price movements. By understanding the definition, characteristics, time horizon, holding period, and key principles and strategies employed in swing trading, investors can develop a solid foundation for implementing this approach effectively in the financial market. Day trading is a trading strategy characterized by the buying and selling of stocks within the same trading day, with all positions closed before the market closes. Day traders aim to profit from short-term price movements, capitalizing on same-day volatility and liquidity. This approach requires close attention to market trends, quick decision-making, and disciplined risk management. Day trading techniques and strategies focus on identifying short-term price patterns, momentum shifts, and liquidity imbalances. Scalping, a popular day trading technique, involves making multiple trades throughout the day to capture small price movement. Other strategies include momentum trading, where you capitalize on strong directional moves, and range trading, which involves trading within defined price ranges. Technical analysis provides day traders with valuable insights into price trends, support and resistance levels, and potential entry and exit points. Utilizing chart patterns, technical indicators, and charts, you can identify high-probability trading opportunities. Market timing is also critical, as you must execute trades at optimal times to capitalize on price movements and minimize slippage. Overall, day trading requires a combination of technical analysis skills, market timing expertise, and disciplined execution. By understanding the definition, characteristics, trading techniques, and strategies, as well as the importance of technical analysis and market timing, you can effectively navigate the fast-paced world of day trading and potentially profit from short-term market movements. Swing trading offers several advantages for wealth building. Firstly, it allows you to capitalize on medium-term price movements, potentially yielding higher profits compared to shorter-term trading strategies. Swing trading also requires less time commitment than day trading, making it suitable for busy schedules or part-time traders. Swing traders can benefit from reduced transaction costs and less stress compared to day trading, as positions are held for longer periods, reducing the need for frequent monitoring. Despite its advantages, swing trading also presents challenges and limitations. One of the main challenges is the potential for larger drawdowns during market downturns, as you hold positions for longer periods and are exposed to market volatility. Swing trading requires patience and discipline to wait for favorable trading opportunities, which may not always occur. Market timing is crucial in swing trading, and mistimed entries or exits can result in missed profits or increased losses. Real-world examples of successful swing trading strategies can provide insights into effective approaches for wealth building. For instance, trend-following strategies, such as moving average crossovers or breakout trading, have been successful in capturing medium-term price trends. Also, mean reversion strategies, which capitalize on overextended price movements, can also be profitable in certain market conditions. By studying these examples, you gain valuable insights into the principles and techniques of successful swing trading and apply them to your own trading strategies. Day trading offers several advantages for wealth building. Firstly, you have the potential to generate high returns by capitalizing on same-day price movements and leveraging short-term market volatility. Day trading allows for quick decision-making and immediate execution of trades, allowing you to react swiftly to market developments and exploit short-lived opportunities. Also, you benefit from the flexibility of trading from anywhere with internet connection, making it accessible to a wide range of individuals. However, day trading also presents significant challenges and risks. One of the main challenges is the need for continuous focus and concentration throughout the trading day, as missing key opportunities or making impulsive decisions can result in significant losses. Day trading requires a high level of discipline and emotional control to adhere to trading plans and risk management strategies consistently. Also, you're exposed to market volatility and liquidity risks, which can lead to increased slippage and execution costs. Risk tolerance and temper play a crucial role in selecting a trading strategy. You must assess your comfort level with different levels of risk and volatility. Those with a higher risk tolerance may be better suited for day trading, which involves rapid decision-making and exposure to same-day market changes. Conversely, individuals with a lower risk tolerance may prefer swing trading, which offers a longer holding period and potentially less volatility. Time commitment and lifestyle considerations are essential factors in choosing a trading strategy. Day trading requires a significant time commitment, as you must monitor markets closely throughout the trading day. It may be suitable for individuals with flexibility in their schedule, or those who can dedicate full-time hours to trading. On the other hand, swing trading offers more flexibility, allowing you to hold positions for several days to weeks and requiring less frequent monitoring. This makes it more suitable for individuals with other commitments or those looking for a part-time trading approach. Market conditions and trading goals should also inform the choice of trading strategy. Different strategies may perform better in certain market environments. For example, day trading may be more profitable in volatile markets with high trading volume, while swing trading may fare better in trending markets with clear price trends. You should align your trading goals with your chosen strategy, whether it's generating short-term income, building long-term wealth, or a combination of both. By considering these factors, you can make informed decisions about which trading strategy best suits your needs, preferences, and objectives. Doing a comparative analysis of swing trading and day trading can help you determine which strategy is best suited for building wealth. Swing trading offers the advantage of capturing medium-term price movements while requiring less time commitment compared to day trading. On the other hand, day trading allows for the potential of high returns, by capitalizing on same-day market volatility, but demands continuous focus and rapid decision-making throughout the trading day. Identifying the most suitable strategy depends on individual preferences, risk tolerance, time availability, and financial goals. Investors with a higher risk tolerance, flexible schedules, and a preference for short-term trading may find day trading more appealing. Conversely, investors seeking a less time-intensive approach with a longer holding period and potentially lower volatility may prefer swing trading. Recommendations for beginners and experienced traders vary based on their level of expertise and familiarity with trading strategies. Beginners may benefit from starting with swing trading, as it offers a more forgiving learning curve and requires less time commitment. As they gain experience and develop their skills, they can gradually transition to day trading if desired. Experienced traders may have the knowledge and discipline to engage in day trading effectively, but should still carefully assess their risk tolerance and time availability before committing to this strategy. Ultimately, the best strategy for building wealth depends on individual circumstances and preferences. By considering the comparative analysis, personal goals, and recommendations for beginners and experienced traders, you can make informed decisions about which trading strategy aligns best with your wealth-building objectives. In summary, swing trading and day trading offer different approaches to wealth building in the financial markets. Swing trading allows for capturing medium-term price movements with less time commitment, while day trading capitalizes on same-day volatility for potential higher returns. Both strategies have their pros and cons, and understanding their key points is crucial for making an informed decision. It's essential to choose a trading strategy aligned with individual circumstances, including risk tolerance, time availability, and financial goals. You should carefully assess these factors before committing to a particular approach to ensure it suits their preferences and objectives. We encourage you to explore both swing trading and day trading strategies and adapt as needed for wealth-building success. Experimenting with different approaches can provide valuable insights and help you refine your trading strategies over time. Remember, success in the financial markets requires patience, discipline, and continuous learning. By staying adaptable and open-minded, you increase your chances of achieving your wealth-building goals in the world of trading. Thanks for watching Money Mastermind. If you enjoyed this video, be sure to check out our other videos for more investing tips. Don't forget to like and subscribe to stay updated on all our latest videos, and we'll see you in the next one.